What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. We're going to look at the daily time frame and the 30-minute time frame. Let's get into it. All right, so we are here on the daily time frame looking at the SPX, the S&P 500 index. The market closed today at $3,349.17, up just over a half a percentage point, 0.64%, moving into this red rectangle, which we've been calling the bear's camp. The green one is an area of support. We call that the bull's camp. As far as I see it, the market continues to push higher and higher. I do not see why we wouldn't be testing the all-time market high, looking at 3,400 to be that level of resistance, potentially breaking above it. We got to play it day by day to see what actually happens. The price today had a little bit of a gap down, but ultimately ended on a very high note, very bullish looking candle. That could be due to the tweet that came out by Donald Trump about the executive order him and his staff is working on about the key measures around the virus-related stimulus package. Notice how he talked about the payroll tax cut, eviction protections, unemployment extensions, and student loan repayment options. So there'll probably be more news on that in the near future. This has been a buy the dip, sell the rip type of market. The market continues to move higher and higher despite everything that is going on in the economy. We have now risen 5 straight days, technically 6 straight days in a row, since the news of the jobless claims being better than expectations. So what's going to happen next? Well, let's look at the bearish things and the bullish things on the chart to really determine where the price action might go. As we've already stated in the daily, the main key level to be keeping an eye on is 3,400. It looks like the market wants to test that level. We recently broke above this pretty major trend line that we've been talking about recent videos. So we might potentially see someday here, maybe boom, come up to 3,400, maybe back test this trend line and then continue to move higher. Or if the market just says the heck with that, they just gap over this 3,400 level and starts moving higher. Ultimately, the entrance to the bull's camp down here at 3,200, that seems to be a very strong level of support if the price were to pull back to that level. We have the 50 period and the 200 period moving average starting to get a nice spread, which means that the context of the chart is just getting more and more bullish as the price action remains above those levels. 3,000 is the main area of support, but my eyes aren't really quite on that at this particular point in time because, well, the market is pretty significantly above that level, 350 points above that level. Something to keep an eye on is that the current price action right now is above the 200 period moving average by just about 10%. So it is pretty overextended. Not like I've seen in some other charts where it extends even further past that point, but just know when it gets really overextended from the 200 period moving averages, we can always potentially see some type of snapback eventually. A real cause for concern is if the price action were to get up 40-50% above that 200 period moving average, which I have seen in charts before. All right, let's go ahead and hop into the 30-minute time frame to get a good sense as to where the price might be heading tomorrow. All right, we are here on the 30-minute time frame. This blue vertical line going down the screen, that just represents where the day started, and every candle after that point represents 30 minutes of data. We have a couple red lines on the screen and a couple green lines on the screen. Those are resistance lines that we plotted out yesterday and support lines that we plotted out yesterday as well. The day started off with a gap down, but ultimately just pushed higher into this area of resistance that we mapped out previously, the 3330. That was the entrance into the bear's camp. We got rejected, came back to touch the level of support that we mapped out. This was the top of that window, this gap right here that we mapped out yesterday. And then ultimately from that point on, we came back, acted as some resistance and support right at 3330, and then moved higher throughout the day. This 3340 level of resistance really just got completely obliterated by this big bullish candle, and then we just saw continuation to the upside. The last 2 candles of the day are kind of contradicting one another. However, it is in bullish context, but you had an inverted hammer right here, and then you had a hammer candle right here. So it seems like the price is kind of getting a little confused at this particular point in time. It looks like that 3350 level will be an area of resistance that we want to keep an eye on going into tomorrow. So I'm just going to go ahead and map that right up here at 3350. Now, once resistance is broken, it then becomes support. And why I'm telling you that is because we had resistance here at this 33.30. We had resistance here. Then when we broke it, it acted as support right around here. So this level now is going to be an area of support. So we're going to go ahead and make that green. I'm going to go ahead and remove this green line down here where the gap window is. I'm going to remove that just because the price action is pretty far ahead of it. We have the 50 period moving average sloping up into this 33.17 level. That's just going to add more to the narrative that this right here is going to be a strong level of support. Depends on where the price opens up tomorrow, but if the price remains above the 50 period moving average going into tomorrow, which it looks like it will, the 50 period moving average is going to continue to slope up. So we might see it reach up to this 33.30 level, which would add more fuel to that support level. So if we do get a push up higher, maybe that might be a potentially good opportunity to buy in on the dip with a tight little stop loss right there. It ultimately just depends on where the price is going to be heading into tomorrow. Now, our major area of resistance is obviously the all-time high for the market, 3,400. But let's go back into the history of the chart just to see if there's any other levels of resistance that we want to keep an eye on before we get to that 3,400. So we are back here in February looking at the history of the price action on the 30-minute time frame. And this 33.50 level, look at where it actually lined up to these candles right here. Very interesting how the price came up and then got rejected right here at that level. Pushed back down into what area? Well, the entrance into the bear's camp, the 33.30. Technical analysis is very important, folks, and this is exactly why these levels mean something, especially to computers, algorithms, other traders, etc., etc. So if we get a break above this tomorrow, say if the market wants to gap up and move higher, where would be an area of resistance? Well, really something that sticks out right away to me is this 33.60 level right here. I'm going to go ahead and make that red. Now, why is it 33.60? Technically, I would say maybe it's a little bit higher, but as you can see, the price gapped down right here on the 30-minute time frame that day, February 21st. So on February 21st, we had a big gap down and a huge aggressive move to the downside. But if you look in the history of the chart right here, you see that that candle right there acted as resistance, and when it broke above, it acted as support a couple of times right here. So that level, that 33.60, I'm going to go ahead and place that as an area of resistance for going into tomorrow's trading day. And then I'm going to add one more area of resistance just in case that the price does want to continue and head higher into tomorrow. And that level is going to be 33.75 to keep an eye on. And the reason why there is because clearly after this bump up, it acted as resistance there. And then over here as well, it acted as resistance too. And if I go back in the history of the chart, yeah, look at it acted as support. We had resistance, resistance, resistance. So there's multiple levels at that 33.75 is going to be one of those levels to keep an eye on going into the next couple of days of trading. So let me go ahead and go back to the current price action. All right, so these are the levels of support and resistance that you're going to want to keep an eye on heading into tomorrow. That is all I have for you on today's S&P 500 technical analysis video. See you tomorrow. Hey guys, it's me again, Michael Silva, obviously, you know my name. And I do these videos at the very end, obviously, for my loyal fans that stick around because I don't need everybody else just mooching off these insane patterns that are very rare in the first place. Now, yesterday we went over the caterpillar pattern. Ladies and gentlemen, we have something new in history taking place right here. This is the double caterpillar pattern. Now, this is also known on Wall Street as the double cat, or the double larva, or the double pillar, the double Pilla. But that's besides the point. What we have going on here is something absolutely extraordinary. Okay? Obviously, caterpillars, they eat a lot of leaves, and guess what? Now we have them showing up in flocks to eat what? Well, to eat the liquidity that the Federal Reserve is supplying to the markets, right? The money tree. So they're sitting here on the money tree, now coming in flocks apparently, right? Then they're going to hang upside down. What does that mean? I guess we'll get into it. And when they hang upside down, what's going to happen when they break out of their cocoon? They fly away. They're flying away. They're telling us right now that they're flying away. So what do we got going on, right? So we have this little guy down here. I'm going to call him Jimmy. Okay, Jimmy's down here. He's just saying, hey, what's up? He was by himself, obviously, and we talked about Jimmy the other day. And then all of a sudden, Tom shows up, okay? Tom, his buddy, a little bit longer neck, kind of cooler. Looks like he's ahead of the race here to the money tree, so he'll probably become a butterfly a little bit sooner. He has a little smug little look on his face. I wonder why it's smug. Maybe we'll find out why his face is smug tomorrow. I don't really know. But clearly we have a double caterpillar pattern. You can't make this up because it's right here on the screen. This is why technical analysis is so important. So when people say things like technical analysis doesn't work, yeah, well, look at this chart. Obviously it works. It's a double caterpillar pattern. Unfreaking real. So what's going to take place in the markets, and why am I bringing this up? Well, it's very important. In 1814, a man by the name of Coco Silva created this double caterpillar pattern, and what he said was, when they eat all the leaves from the money tree, they soon have to hang upside down and then turn into a butterfly. So what are they saying? Well, the caterpillars are coming in droves apparently. They're eventually going to hang upside down, meaning we might see them stop eating for a moment the money that is being supplied by the Fed speaking. Then we might see that little bit of a pullback while they hang upside down. But then what happens after they hang upside down? They take off with their wings. Can't make that up, folks. You can't. See you tomorrow.